Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it is Tuesday and a pretty big down day. Some people are like, oh, how did this happen? And some who read technicals and look at price action and have a process pretty much watched it and anticipated the unravel of it. And to start of the week, you had no clue what was going to happen. I came in Monday morning excited. I was like, I'm in 6 longs. We have a gap up. Tech looks good. They're going to mark these things up for the end of the quarter. And then all of a sudden, within the first half an hour, technology that was on its third up day didn't hold this momentum level. So if you sold some strength, you had a spot to get out. And then by the end of the day, most of the high beta tech names that are the leaders of the market, whether it was Google, whether it was Facebook, whether it was Amazon, whether it was Apple, all got rejected into resistance, closed on lows, giving you another signal to lighten up longs, especially if you bought on the 50-day the week or so before. And some guys said, hey, this is my first signal to get short. We had a red dog reversal. We have engulfing bars, bearish engulfing bars, so let's get short because people have been saying let's get short for months and years, and now let's get a signal when finally the market can confirm some weakness, and that was yesterday. So today you come in and you try and figure out what's next. So for me, I was like, okay, I'm coming in flat. What could happen? Do we reclaim yesterday's lows? Do we reclaim the low in the Qs? Do we reclaim the low in the S&P cash? Question number one. Or does it get rejected there and then do certain things change? What do I mean by a change? Does the S&P cash that was above the 21-day break it? Do the Qs that were holding that a level I'm going to get up to hold that gap from last week? Do some of the stronger names give up the 8-day to go to the 21-day, or do some of them give up the 21-day to get to the 50-day? All things you have to ask yourself before the day starts to trade. So this way you have it in your head, so when the market's moving, you could execute. So with that said, I know a lot of you, are members of RAA, where I put out a full note with 25 plus names with the levels, and some of you just look at the Morning Call Express, which gives you the flavor. And also, if you look at my Twitter feed, I always post a chart of the S&P cash, which is a blueprint with some thoughts to try and help you, as well as lately I've been doing the the S&P cash and the Qs because I think that they've both been important. So let's go to today's action after thinking about all those things that I just said. First things first, S&P cash. If you look at it right now, okay, I came in also thinking yesterday that potentially we could break above 2441 and go up and mark up the market. What happened here? We got rejected. Signal number one to get out of the way. 2441 didn't hold. We opened up above a momentum level and failed. That's a sell signal. That's distribution. If you close above it, that's accumulation. Okay, so that is one signal to get out. Okay, or reduce. Okay, then today, where are we going to be able to reclaim yesterday's low and make it as if yesterday didn't happen? What was yesterday's low? I put it in the morning, 2437. And if we get rejected there, do we break this little floor and close below the 21-day? Okay, well, we now close below the 21-day after getting rejected here at 2441. So 2 down days. Do you short the close here today if you didn't short yesterday or didn't short the bounce? I don't know, but I don't see any reason why you should be long. It looks like they're vulnerable, and now below the 21-day, what could be next? It could be the 50-day. Doesn't have to be tomorrow. The end of the quarter is still happening on Friday, so maybe they try and do something. But at this point, if you had a horrible 2 days, there were reasons why you could have been a little safer. And that's the S&P cash. Now you go to the Qs, which gave you that shot across the bow 2 weeks ago. What's a shot across the bow? A huge wide range bar that takes out multiple moving averages and engulfs a range. Okay, then what you look thereafter is whether or not the market action kind of confirms that weakness. It could take a few days. Sometimes it takes a few weeks. Well, yesterday confirmed the composure change then. So let me show you what I'm talking about. So here are the Qs. The Qs had a huge, okay, first of all, you look 2 weeks ago how different this was. Not even 2 weeks ago, I'm sorry. This was in May when this trend was broken right here, okay? Broke the 8-day. The following day, it took back over half. Then it took back the 8-day, and then by the time you looked around 3 days later, that whole day was engulfed and we had new highs. So this time, okay, a bigger wide range engulfing bar came down, held the 50-day, went up to the bottom third, did a double bottom. This time kind of pushed the envelope yesterday, and what did it do? Came up to the prior support, which was this 4-day flag, and it turned into resistance. If you didn't sell into there, fine, but once it didn't hold this pivot area, which was 141.42, that was your next sell setup. So not only could you have targeted a place to sell into resistance, you could have then got out once it went above there and just went back below here and not anticipate a top. Some of you guys might have even got short. This was my spot where I reduced, and then it went red. You could have chosen that too. Then what happened today? We did not reclaim yesterday's low. In the morning I said if sellers have any power, what do? They keep it below 140.27. So they kept it below 140.27 and bam. Now you have your first close below a 50-day moving average. Here it held, so that's also something different. And you know what? I hate to say it, I don't hate to say it, you know what? There are some bears, and I would say it makes some sense, are pointing to some kind of head and shoulders top pattern in the Nasdaq, where you have the left shoulder, the head, the right shoulder, and this could be a bit of your neckline with this an ascending trend line. Okay, granted, in the last 2-3 years, this neckline is a much better buying opportunity than shorting, but you still have to take notice when that happens. So tomorrow, we'll see what happens. Do we open down, and could you buy it in the hole? Does it open up and get sold, or do you open flat? And we could use today's low as a pivot, which is 138.04. But for me, who's risk averse, I like to see price discovery. I don't buy in front of this just because we had 2 down days and I'm like, I buy the dip, no. But do I short here if I didn't go short yesterday or didn't short a bounce? No, I'll wait and see. But this, this is kind of scary looking, where we're not scary looking, but here is, the head to the neckline, and that could give you a move all the way down to here. So you don't want to start buying something too early because that's what's worked, because things do change. And that was the cues. Okay, I said this morning, look at some clues, right? What does Google do? Does Google open down 12 and go flat, or does it open down 12 and go down 20? What does Apple do? Does Apple, that got rejected at the 50-day, does it reclaim the prior low and hold it and rally and say, okay, it doesn't matter if the iPhone's getting pushed out the components 2-3 weeks, or does it try and get rejected and go lower? Both those things help give clues that the technology sector was that weak. You look at Google, and Google, to me, also looks like a head and shoulders top. Granted, it just had 2 big down days, so you're not going to just press the neckline, but yesterday it got rejected, okay, got above a prior high, which was 986, put a high and came back below it, your sell signal. Some of you might have got short, closing the lows, engulfing a week worth of action, saying this is really weak. Then gap down, stayed below the prior low, and now look at it, right on this little neckline here below the 50-day. That looks weaker than stronger, okay, and if this pattern does work out, all of a sudden, you're talking 1,000 to 940, that's what, 50 points, and that brings you down, to here. So just don't blindly be buying, okay? And after 2 big sharp down days, it could rally a little bit into the end of the quarter before turning lower, but just realize that this pattern could exist here. Amazon also. Yesterday, I was so bullish on Amazon, thinking they were going to mark it up. Okay, I was dead wrong, but it didn't really matter. It went above 1,007, didn't hold it, so I got out. I even got out of someone who went red, saying, okay, I lost a little bit of money. But if I would have ignored the fact, could have got hurt. Why? Because it tried to get back above 992. Actually pushed it a little higher. I actually got a cute short. I didn't hold it. And then closed on lows below the 21 day into the gap. So why can't this do the 50-day? So all of a sudden, yesterday, turned into a bullish-looking pattern to get marked up to a distribution failure engulfing bar that took back 4 days, giving you a bearish signal. Listen, you have to acknowledge these signals when they happen. You have to switch gears, even sometimes if they mean nothing, just to get out of harm's way. Same thing with Apple. Apple here, okay, got rejected. I was trying to be long Apple a few times, thinking, hey, you know what, maybe it's Apple, and I could ignore that it's technically broken and it failed at this upper pennant. So right here, we had a little bit of, I remember, a reversal that I bought and got hurt. And then I tried it on this day, and I actually made money. I was long into this little push, sold some strength, got stopped out around 147 and got out of the way. And now look at it. Now this looks doesn't look strong. Looks more like a bear flag that could be a continuation to the downside. And if you said, hey, I'm going to use the H sell setup. Here's your pole. Here's the first pivot high. I'm going to short verse that today. You have a good price, and then maybe it breaks below this and accelerates lower. But at this point, it's below the 8-day, it's below the 21 days, it's below the 50-day. Unless you've been long Apple for multiple years, you have to take notice. And if you happen to be trading for alpha and cash flow and your next few days matter for your monthly payout, you have to be like, hey, this is more bearish, okay, by failing here versus bullish on the next few days. So that's Apple. Netflix also, remember we had a nice little trade above 155? All right, well that failed, okay, but you could have made a good money, right? Here is a little price push, came into old support that turned into resistance, so you could have targeted that. I think I tweeted that I sold it around 159 just by taking, I was just like, here's a day and a half trade. This still wide range bar looks pretty gross and tech still is vulnerable. Anyway, even if you didn't sell into that strength, you could have sold when it went back below a prior high, which was a momentum level. It didn't hold 158.19, get out of the way, and then this did not happen to you. Some of you might have even gotten short, said, hey, I was waiting for a sell setup, you know, after a big wide range break, and that could have been that, or you could have waited till it tried to rally and couldn't, got below yesterday's low for continuation. Now it's below every moving average and doesn't look like a long. So anyway, if you're shorted, it's, you know, that's what you do, and maybe you have a gap up that you'll sell or not. But this is not a pattern to be long, especially since it's below. When it's above the 8-day moving average, we like to be long, even above the 21-day. Not when it breaks below it. That's when we're tactical, and that's when we're very careful, like here to there. As far as Tesla, it too, today I talked about it being vulnerable. I said, look at yesterday's action, it's kind of weak. In my morning note, I said, if it breaks yesterday's low and can't get back above it, get out of the way, the 8-day could break. And look at Tesla. Tesla broke it, and now it's changed. Why has it changed? Redler, why did it change? Well, here's when it broke above the 8-21-day. Here's when it took out that high pivot. It was above the 8-day moving average this entire time. So what did it do today? It broke it. Something different. Hasn't been below the 21-day. So some people might be buying it on the 21-day saying, hey, you know what, it's a good risk-reward trade. For me, I don't buy it when things close in the dead lows to hope for a gap up. I'll wait for price discovery. But today, some of you that saw the relative weakness here could have said, hey, I'm going to short it below 373, or at least get out if I'm long it. And I've been riding this 8-day trend as it's starting to roll lower. And that's how you maneuver. Now we have 2 down days. What do we know tomorrow? We know that this is the pivot low. This is 362. If it opens up above it, can it hold above it? Or if it opens up below it, can it reclaim it for a trade, especially if you sold some strength or sold when it took out this low or took out the 8-day? That's how you maneuver the ranges. Then let's talk about the IBB. In my note, I'm like, all right, IBB is trying to prove it could hold higher. It's trying to create an upper flag. It's got to hold 316, 317. Why? Do I like those numbers? No. But that's the 3-day range that held after a major rally. I tried buying it today when it was down $1 or so. Went to the gym. I said, I'm going to put my stop in at 316 because if it breaks 316, that means it's not going to hold higher. That means it could do price discovery. It'll get me out of the way. And came back. I was stopped out. Okay, who cares? Look at what happened here. Okay, why did I use 316? Because this was the pivot low right there. You could have even been tighter and used this. Or it said, hey, I'm going to short it because look at the size of the move it's had since breaking above 297. This is a false sense of security. I thought maybe it's a bull flag to continue. It wasn't. So I bought it, I think, right around 318, and I got stopped out at 316. I lost $2, big deal. It fell another 6. So now tomorrow, we'll see. It could be juicy. If we get it gap down tomorrow, what I would write in my note is if it's just a down $2, I'll say, you know what, IBB's had a great breakout from 297 to hit 323. It couldn't hold 316 and hold higher. Closed on the 8-day, it's opening around 308. I would buy it versus a 15-minute low, and if it reclaims yesterday's low of 310.50, it could take some pressure off. That's a great setup. If it opens up $5, hey, you know what? You had to blindly buy the 8-day, and that's something that I don't do. What I would say then is, hey, you know, IBB closing the lows, it's up $4 or $5. You know, maybe old support, which is 316, turns into resistance, so sell into that, and it could, meet some resistance. And that's some of the language. I'm just trying to teach you guys some of my language because, my grammar is not great, but my language could be interpreted into ways to save you money and make you money. So in the Morning Call Express or the recap, I just try and talk to you about my certain code of language, and I write it the same way in my morning note. So usually if you are part of Redler All Access and you get my full note, you know what it means, and also hearing me talk about it in the recap also gives you a little bit of clarity on some of the reasons and rationale, because I like to give the reasons and rationale so you can think about it and internalize it. It'll help you make decisions and execute quicker. So at this point, tomorrow's Wednesday, end of the month is Friday. I talked about are they going to dress them up or pull down the skirts? Well, they pull down the skirts, and that's not nice, especially if you're a bull. But if you're not and you're a technician, it doesn't matter. You might have gotten short yesterday or got out yesterday and then today made some money, or were patient like I was. They just pretty much sat there and said, I'm going to wait and see, because some things are in no man's land, some things are bent, some things are broken, some things have been strong and have room to go lower. You know what? I'm just going to let the market tell me what's next with a little bit of discovery. So for tomorrow, I think the best setup would be down 6-7 handles where we can maybe scoop up, certain spots for a bit of a bounce. Some people might say, hey, I want to gap up 5-6 handles because we closed so weak. I want to sell that to then break today's low. It all depends where you sit, and we'll have a plan for either depending on how it situates. But for tonight, just like last night, I went home flat, excuse me, flat equities because I didn't like the setup. Same thing I'm doing tonight. Gun to head, I'd probably be short, same way as last night, but there's nobody doing that, so I don't have to make a decision. I could just wait and bide my time because cash is a position. Have a great night. I'll see you tomorrow.